Thank you. I'll try to be quick because I know everyone wants to have lunch, so great. So do we have my slide presentation by chance? Okay, there we go. If you wouldn't mind going to the next slide. So it's a horrible picture of me. I'm sorry about that. So basically, my name is Frank Amato. I'm a private investor, angel investor. I've done that for the last 3 years. Prior to that, I was a precious metals trader for JP Morgan. I was a market maker. I worked in New York, London, and Singapore over the course of like 18 years. Hence my interest in Bitcoin because of these similarities in gold, with gold. I first started mining Bitcoin in 2013, and then I did so again in 2014 through the U.S. Marshall's auction of Silk Road coins. When I did that, well, funny story, I left in 15 to pursue blockchain fully, and when I originally bought the coins through the U.S. Marshall auction, I had to do that through JP Morgan compliance. So when I left, I wasn't fired by Jamie Dimon for being stupid, and in fact, I have an internal memo at JP Morgan stating that I received approval to purchase Bitcoin through the bank. The note I got internally was that the bank has no official doctrine on Bitcoin, so I was allowed to make that investment. So as I mentioned, I left in 2015, and I've been working since helping angel investing in companies, and then helping do advising and things like that. If you wouldn't mind going to the next slide. Oh, there's my shoulder and my, yeah, great. Okay, so one of the things I wanted to talk about was the fact that you're getting these sort of outlandish predictions in Bitcoin from a variety of big names in the space. So Mike Novogratz mentioned 40K by the end of 18. Tim Draper recently came out and said 250K by 22, and you had John Pfeiffer of Pfeiffer Capital say 700K in an undisclosed time frame. What are these guys looking at, and how are they coming up with these valuations? Well, what we have now is a 9,000 price level, and we literally have at least in the U.S., we have a small amount of retail investors that are involved. You have a handful of institutional investors in Asia, and then a massive amount of institutional money that's not in the space at all in the U.S. There's no regulatory clarity, right? And I think that's the wrong slide, actually. Okay, never mind. If you wouldn't mind going to the next slide. So what these guys are looking at is they're thinking of a world where we have an alternate asset like gold, which is a lot more interesting because it has built-in the security protocols and such. But they're looking at an alternative asset that allows you to hedge against things like what the Fed has done with our balance sheet in the last few years. You can hedge against inflationary events, you can hedge against geopolitical events, but that ability to not be tied to a central bank and their policy, whether you like those policies or not, is why we're getting such a radical displacement in prices in interest. Next slide, please. So what I think will happen is I think a 40K price assessment for Bitcoin by the end of the year is very reasonable. And the reason is you may start to see, once we get a regulatory clarity, which should happen sometime this year, once we have a viable ETF that is SEC approved, you'll see a lot more retail and institutional money come in. And then what we may actually start to see is at some point, and it will start with central banks that are out of rogue nations, like North Korea. You'll start to see accumulation of this asset, and then that may kickstart a program where, I theorize, you'll start to see central bank holding, traditional central banks start to accumulate reserves against it, similar to the way gold is done. China and Russia are big accumulators of gold now. This process might take a 5-year time frame, but I suspect you may start to see Bitcoin on this global reserve chart at some point in the future. Next slide, please. This is a news article that came out last year, and it was about the fact that Bulgaria had acquired 200,000 Bitcoin, similar to the Silk Road issue in the U.S. There was speculation that this could have been the first central bank actually accumulating Bitcoin and holding it, because nobody knew what happened to those coins. That could be the case. Again, pure speculation, but next slide, please. Would just want to leave you with the fact that this is a conference that we are throwing in Brussels on 1st of June. My company has a handful of projects that we've invested in, and their Academy token, a handful of good projects. We'd love for you guys to join us at that conference. You can go to the next slide. I think there's one more. And that's my information there. So, can I take any questions at all?
Dead or off? There we go.
Bitcoin at 40,000.
He didn't say 1 million, and he didn't put any anatomy on the...
Yeah, I didn't add anatomy.
Yeah,
I didn't. Yeah,
that.
yeah. But the.
Yeah. Okay. So we're looking at a lot of new pressure coming in from actually a lot more potential assets coming into the market. What do you see, in terms of the central bank's policies in terms of Bitcoin at this point?
Well,
cryptocurrency.
Let me just comment on the 20,000 run up and then back down. I mean, most of that occurred on the CME's announcement that they were releasing futures, right? And I have a lot of familiarity with CME. They have a gold product as well that we traded frequently. And that kind of is setting the stage for the next step, which would be an SEC-regulated ETF. And once that happens, you'll start to see more retail money. There's a lot of money that sits on the sideline now because of the regulatory environment, the unclear regulatory environment. No, I wouldn't say too much risk. It's just so Goldman hired Justin Schmidt recently, which you may have heard. That desk is a client-facing desk right now. They're not a market maker. And they would like to be market makers. Other banks would like to enter as market makers as well, but they don't know if it's a foreign exchange. They don't know if it's a commodity.
Right.
They don't know where it sits in the landscape, and they don't know what the regulatory environment looks like. So they need all of those boxes checked, and then you will see a large influx of money come into the space.
And you think that'll happen this year?
I think the next step is the ETF regulated, because right now you just have GBTC, which is a pink sheet ETF, and that will be phase 1, and that will add, will culminate in a lot more money being entered into the space.
Any other questions?
I split my time between Akron, Ohio, where LeBron lives, and London. So I find that the regulatory landscape in the UK is a lot nicer, so I can vet projects and invest in them easier from there.
Any other questions?
CME's running. I'm from New Zealand. That's where I live at the moment, but we're here in Kentucky, Fort Knox. Have you heard anything that something similar is going to happen with gold reserves in the United States to follow a similar model like the thing that was done in Perth? Any comments?
Well, the U.S. is the largest holder in the world globally of gold reserves. They hold about 8,000 tons. I'm not familiar with what you're referring to. What is the situation? And you mentioned Perth Mint, or so there's a handful of projects in the blockchain space that are looking to do that. So they want to issue a token. It's gold backed. I've had discussions with some of them to come on as an advisor. They're somewhat interesting projects. I just don't see them as scalable because they are attached to real-world assets. So again, one of the reasons I'm such a fan of Bitcoin is gold is kind of this great alternate asset that we've all known about for years. It's got a 4,000-year history. It's a store of value, you know, arguably one of the oldest, aside from cowrie shells, which were also used for about 4,000 years as money, right? Which is an interesting. Both don't have a central authority issuing them. But gold to me, and I was a dealer for 18 years, and I hate to say this, but it's a very elitist product. It's large institutional investors that hold it. It's central banks that hold it. When we were in 2001, I think it was, when we had the big run-up in gold and we hit 1,900 and the U.S. was expanding that balance sheet like that slide showed, we all were sitting on the desk saying, gold's going to 5,000. This is incredible. You know, people are going to buy into it through the ETF. One of the things we were short-sighted about is its scalability. It's an elitist product. Governments, big hedge funds. Bitcoin doesn't have that problem, right? I mean, we can all pick it up in our wallet today and be our own custodian, and we don't need a third party, you know, to hold it for us. We don't need a third party to verify it for us. You could give me a gold coin in payment for my speech today, and I wouldn't be able to tell if it was gold-plated lead. You know, I would need a third party to say, with ultrasonic, you know, device, and look at it and say, yeah, it's solid gold, right? So I don't view a lot of those projects as scalable. They're just taking a real-world asset, tying it to a token. It may have a niche following or a niche interest, but it's not going to go global like, you know, like Bitcoin could. I don't mean to sound like a Bitcoin maximalist either, because, and I'm coming off like I'm sounding like that. I invest in other projects as well. I just think that Bitcoin is going to be a core product. You have this issue now out there where people are talking about stable coins. So you have Tether, you have MakerDAO, you have Basis, which just rebranded from Basecoin. I really believe that Bitcoin will be the stable coin. Bitcoin will be, anytime you do a foreign currency transaction, it's X currency / Y, right? You're trading, you know, dollar yen, you're trading euro dollar, you're trading sterling against the dollar. I think Bitcoin will be the 3 digits next to whatever you're trading, and you will move back into that. Now, people argue against that because they will argue that a store of value it can't fluctuate in value by 30% in a day. And John touched on that in his speech yesterday. And the truth is that other currencies in the world fluctuate more than that all the time. At the time of Brexit, the pound moved 30% in one day. Some countries have 3,000% inflation. So Bitcoin to them is a very stable solution. One person's problem with the currency might be another person's solution, and Bitcoin certainly is the case if you look back in history for something like Zimbabwe, who effectively inflated their currency out of existence, right? Again, holding something like Bitcoin, the monetary policy is a mathematical algorithm built into the coin. That can't happen. You don't need to know anything about Bitcoin or like it to purchase it as a hedge against those type of things. And that's what these investors are thinking, like Draper, when they're talking 250,000.
Well, I want to thank you. I actually think you could probably entertain us for quite some time with the expertise and background you have.
Oh, I want to have lunch, though.
But yeah, we're up against lunch here. So
yeah.
I've got a couple of quick housekeeping things, but
Thanks
thank you
very
very much, Frank.